Bitcoin continues to extend the large bearish divergence visible on the weekly chart, and the price has now broken below a major support area on the daily time frame. At the same time, the Bitcoin ETF market just experienced its worst day ever, with BlackRock recording the largest one-day outflow since its ETF launched. I'll cover that, along with Ethereum and XRP, so be sure to watch until the end. Before looking at the charts, let's start with the ETF news. On Tuesday, the BlackRock Bitcoin ETF reported more than $523 million in outflows, the largest single-day withdrawal in its history. Although a few smaller ETFs saw minor inflows, the combined net result across all spot Bitcoin ETFs was still a $372 million outflow, following roughly $4 billion in outflows the previous day. This means the market has faced very heavy ETF-driven sell pressure this week. Remember, spot ETFs hold actual Bitcoin. When investors withdraw, providers must sell BTC to meet redemptions. That's exactly what happened here. Large withdrawals forced large sell orders, adding significant short-term pressure on Bitcoin's price. Now looking at the Bitcoin weekly chart, the super trend indicator flipped bearish red last week after staying bullish for several years. This is a meaningful signal that was confirmed by the recent weekly candle close. The last time this indicator turned red was at the beginning of the 2022 bear market, a period that led to several months of declining price action. Historically, this signal suggests ongoing weakness rather than an immediate recovery. This bearish supertrend flip is happening at the same time that a strong bearish divergence has been forming for about 6 weeks. Both signals point toward continued lack of bullish momentum and potential bearish extension in the coming weeks or months. Smaller short-term bounces may occur on lower time frames, but the broader trend is still weak, and it's unlikely we'll see a major push toward new all-time highs anytime soon. Shifting to the daily Bitcoin chart, Bitcoin recently broke below the golden pocket support zone between $92,000 and $94,000. Initially, the price closed just under $92,000, offering a weak bearish confirmation. Shortly after, Bitcoin bounced back into the $92,000 to $94,000 region, but failed to reclaim $94,000. That failure turned the previous support zone into a new resistance area, confirming bearish structure and reinforcing the downside move. Regarding trading strategy, I previously suggested a short position targeting a rejection in this zone. Ideally, such a short would have been placed around $92,000 to $94,000, and right now that trade would be a notable profit. I personally missed the entry because I was on a flight, but the plan played out exactly as described. Risk management remains essential. A short taken near $93,000 should now have the stop loss moved to break even at minimum. As the trade progresses further into profit, the stop loss can be gradually lowered to secure gains while still allowing for continuation. For take profit levels, while there is minor support near $89.5 thousand, major support sits closer to $85,000 to $86,000. Approaching that level, partial profit taking would be reasonable to lock in gains before strong support is tested. As always, this is not financial advice, just a transparent explanation of how I personally manage trades. Markets offer opportunities in both directions. In a bullish trend, you buy dips. In a bearish trend, you short bounces or failed retests. Many traders attempt to catch falling knives by buying every bounce, but without a confirmed reversal signal, those attempts often fail. Following the trend remains one of the most reliable strategies. Looking at shorter-term Bitcoin price action on the 6-hour time frame, around a day ago, the RSI became oversold, similar to what happened several days prior. An oversold RSI does not guarantee a bottom. It simply means momentum may temporarily reset before price continues downward. That's exactly what occurred. Bitcoin bounced briefly to retest the golden pocket, failed to reclaim it, and then resumed the bearish trend. The RSI reset toward neutral, giving room for another move lower. Examining the liquidation heat map, the major cluster around $89,000 has largely been cleared. There is still liquidity around $88.2 thousand to $88.3 thousand, with a more significant cluster in the $83,000 to $84,000 area. Before targeting that zone, we first have strong historical support around $85,000 to $86,000, which aligns with the daily support levels mentioned earlier. Bitcoin dominance on the daily chart shows only a small decline, not the kind of sharp drop associated with altcoin season. True altcoin season requires Bitcoin dominance to fall sharply while Bitcoin holds steady. That's not the case now. Bitcoin is dropping, so most altcoins are also dropping, some simply less severely. On the daily Ethereum chart, the key support zone is between $3,000 and $3,100. Price is slightly below $3,000 at the moment, but we haven't yet seen a confirmed daily close below this range. A confirmed close beneath support could flip the zone into resistance, opening the door toward the next major support between $2,600 and $2,700. Ethereum also shows a potential bullish divergence forming, but because it is not yet confirmed, it cannot be relied upon. Even if confirmed, such a divergence would likely produce only a short-term relief bounce rather than a sustained reversal. Solana on the 2-day chart recently retested the $143 to $147 zone, which has now flipped into resistance. This confirms bearish continuation. The next support sits between $124 and $127, and if that breaks, Solana could revisit the $105 area. XRP on the weekly time frame continues to follow the bearish divergence I highlighted back in July and early August. At that time, I mentioned that XRP was likely entering a significant multi-month cooldown phase, and that prediction has been playing out. I expect this weakness to continue. On the daily chart, XRP could be forming a bullish divergence, but again, it is not confirmed. If price breaks below 25 cents, the next supports are 20 cents, then 18 cents, and then 16 cents. Losing the $0.2 level without reclaiming it would make a move into the mid-$0.1 range possible. Chainlink is showing similar behavior on the daily chart. The trend remains bearish, with a potential bullish divergence that remains unconfirmed. Support slightly above $13 is currently breaking. If Chainlink cannot reclaim that area, the next significant support lies around $11 to $11.50. All of these trading setups, including shorting breakdowns or failed retests, can be executed using the exchanges I've mentioned previously. Whether the market is bullish, bearish, or moving sideways, there are always strategies that allow traders to capitalize on price movement. If you want to learn how to make profits in bullish or bearish price action, watch the video in the top left. If you want to learn strategies for sideways markets, check out the video in the bottom left. That's all for today.